look at few key areas available for MCS February 2019. So we are trying to look at uh, not kind of major areas, but few areas that we think are important for the case study will be looked at now. So basically, this is a fourth session of ours. In the fourth session, we will try to see a few unrelated areas together. So we are trying to kind of go through very specific order, but to look at some of the key areas. Now, obviously, E2, P2 are absolutely critical. Now, that's why we have given a set of questions from E2, set of questions from F2. I want you to go through all those questions given from E2, P2. And then try to see how they can be applicable for the Feb 2019 case study. Now, first step obviously is to know the theory part of E2 and P2. Don't forget, there are 4 skills available on the exam day. One of them is the technical skills. Even technical skills marks are not given just because you have the technical skills. Technical skills marks are not given just because you know the technical model very well. Just because you know the theory, even the technical marks are not given. Technical marks are also given when you apply the theory into the case study, theory into the given situation. If you are not sure about, go and watch the videos on the ground rule section where we have defined the 4 skills available: technical, business, people's leadership. You will get a better understanding about it. So, starting point that I wanted to tell you is to go through the E2 and P2 questions available and watch the videos on the accounting standards. So as I said, few areas to be covered. You being a strategic management accountant, you got to be looking at 2 main areas. One is the external focus, other one is the forward looking. So what do you mean by external focus? You can't be looking at the internal organization only. You got to be looking at the external organization. You got to be evaluating the competitors. You got to be looking at what is happening in the environment. You can't be evaluating the core competence of your organization. You got to be evaluating the core competence of your competitors. You can't be looking at which products will give you more profits. You got to be look at which product competitors are making more profits of. That is what the external focus is there for. So if you look at the external focus as a kind of the heading, kind of the area, you got to try to benchmark yourself with the organization available outside. Now, in our case study, internal benchmarking is a great thing that we can do because we have 30 different practices. So I'm sure you can do a lot of internal benchmarking within the organization. Waiting time of patients can be compared with 30 different practices available. Treatment time for a very specific treatment, we have 12 different types of treatment, but treatment time for a very specific treatment, like the standard treatment that we have, can be compared against 30 different practices. Competitive benchmarking, you can move on, but don't forget, in the area of capital city and surrounding region, we are the largest. Therefore, when we compare, you got to be aware of that situation as well. You got to be forward looking as well. You got to be forward looking as well. Now, one more point on the external focus is you got to review the competitors. So how to collect information, what information to be collected needs to be considered. That is coming from the E2 areas. Now, when you say how to collect information, be careful. Don't write on the exam day for the MCS Feb 2019 what is given in the E2 theory note. You got to adjust it to the situation given. That's where the marks are. As an example, I covered this point in my mock 2 video anyway. Let me repeat myself. You can't be saying, look here, to look at their annual reports. Most of your competitors, including us, we are the largest, we are a private limited company. So most of competitors might not be having published accounts. So be careful about that. And don't forget, there will be a motivational aspects of available in the benchmarking as well. When you try to compare with, as an example, a overseas large player in the dental industry who has about 100 dental practices, you might be demotivating your staff because we will compare with much powerful, larger competitor, and will be telling our team, look here, you're not doing very well. But the resource available for our team might be very much different to the resource available for the competitor that you have decided to compare with. Now, you got to then calculate the service-wise profitability. We have 12 different products or 12 different services available. We got to calculate that. Now, Ansoff needs to be seen. We have taken a picture of Ansoff here as well. Okay. What are the new products, new markets that we are trying to go into? What are the new products and new markets that we are trying to go into? Now, if you're trying to go into something entirely new, you got to talk about it. Our experience may be not great in that area. The capacity availability is one of the other areas that you need to argue and consider, because the pre-scene says we are almost at the full capacity that is available. Now, going outside of the capital city and surrounding area can be I'm sure that will be there in one of the variants at least. So you got to be ready for that as well. Now we have 30 different practices available. In the 30 different practices, we got to decide how do we like to run them. Do we like to run them as cost centers? Do we like to run them as revenue centers? Do we like to run them as profit centers or investment centers? So if they are cost centers, each practice manager's job is to measure the cost, control the cost, monitor the cost. Revenue centers, they will be responsible for monitoring the revenue, increasing the revenue. Profit centers, they'll be responsible for revenue and cost both. But in the profit center, managers can't be taking investment decisions. If you are allowed to take investment decisions as well, then only it will be named as an investment center. So you got to figure out our 30 practices, what are they? Don't forget, they are registered as separate legal entities as well. So that might tell me most likely they'll be profit centers, but you need to argue what's the best way to run them. And don't forget, the practices and the KPIs will be differing based on how we would like to run them. Now look at a function like purchasing, look at a function like marketing. If you are running it as a profit center, then the marketing function has to be decentralized. Purchasing function has to be decentralized. Because let's say there's one practice manager, there's one heads of practice, he will be measured based on the profitability of the practice. And then he might say, look here, if I am measured on the profitability of the practice, I need to ensure that I do the marketing in the best way that is applicable for my area. So I want to have the control of doing the marketing. Purchasing is very much similar. Recruitment of dentists, not the shareholders, recruitment of nurses needs to be decided whether it will be centralized or decentralized. So what I'm trying to say is whether these functions are centralized or decentralized will have a link to whether we run as a cost center and profit center. Now looking at it, marketing is clearly centralized. Right? So 30 different practices are close by, not far away. We may need to maintain a standard way of marketing, economies of scale. Those are the arguments. That is why marketing is centralized. We have one marketing director who's a dentist who spent 20% of time on the marketing. So now we got to see how we are going to change it. And can we actually allow individual practices to market by themselves? Is it a good idea or not? Right? The other matters that I would like to see is different prices at not 20 different practices, but 30 different practices. I mean, can we charge for the same service different prices from the 30 different practices? That might not be looking good on you as well. So therefore, that may be an argument to say, look here, you have a standard ways of running it. And competition between the practices, competition between the heads of practices might be bad as well. Dysfunctional behaviors might come into the picture, right? So again, if you try to calculate practice-wise profitability, or if you try to calculate service-wise or the product-wise profitability, direct product profitability, then the activity-based costing needs to be used heavily. We have a head office, even though we are not being told where. We were told the finance team is based at the head office, so we have a head office. How do we allocate the salaries of the head office to the individual practices? Needs to be decided based on activity-based costing. You look at a practice now. In the practice, we have a receptionist. How do we allocate the cost of the receptionist? We have a practice manager. How do we allocate the salaries of the receptionist? How do we allocate the salaries of the practice manager into the 12 different services available? Again, activity-based costing needs to come into play. So you got to decide how those things will be done. Now, foreign exchange impact might be part of the economical part in the PEST analysis available. Of course, in the economical part, it might not be only the foreign exchange. It might be obviously the interest rate, the exchange rate is what the foreign exchange is, but the GDP growth, don't forget, GDP growth is directly linked to the growth of our industry. Like we have 12 different services. Out of that, there'll be some services that are non-essential. Those non-essential services may be the ones where we are making most money. And those non-essential services might have a direct impact if the economic conditions are not doing great. So coming back to the foreign exchange, well, you might be importing items, so that will have an impact on that. Dental tourism will have an impact from this. Maybe there are a lot of people from foreign countries coming into our country to enjoy the dental tourism, but it might be more expensive for them with the changes of the exchange rates available. So that is a likely situation available. Dental tourism is a very common topic in the world now. Now, then the relevant accounting standard here is the IAS 21, the effects of change in foreign exchange rates. So we are divided the accounting standard into many different areas. I will not try to go into that now. We might decide to expand ourselves on the exam. We might go into new products. We might go into the other parts of the country, other cities. We might go into a new country. So we got to decide how do we finance, how we are going to finance. Now, we are a private limited company. So listing is not we can list ourselves, we are a listed company, we can go for a IPO, initial public offer, but that won't be quick solution. It will take time. It will take time for us to go through the process of listing. Please listen to the audio available on how do we list a company as well. And then you got to be aware of the arguments whether we should list our company or whether we should not list our company. Don't forget, as of now, we run as a kind of a very controlled environment. I mean, we have 30 different practices, 40 different shareholders. All 40 different shareholders are dentists. So they will be allocated for 30 different practices. Most likely, each practice will have one shareholder working there. So if you're trying to list yourself, control will not be there. Now, obviously, if you're going to list, you will not be able to say the shares can only be bought by dentists. Is not a practical thing that we need to say. So then we need to be ready to see that non-dentists coming as the shareholders, becoming directors of the company, all that. Well, you can go for debt. You can go for debt and the equity. Well, the reasons why we need to go for debt is we are zero gearing company. We don't have any debt at all. We have 48 million of assets available. I am sure that includes 48 million of property, plant and equipment will include the land that we have, the building that we have, dental chairs, the other equipment that we have. So 48 million can be a substantial number. We believe that 30 different practices are owned by us because in the budget for the 4-month cost, we are not seen in rent expenses. We are not seen in rent expenses. Therefore, I'm sure these are owned by us. When you're talking about the budget, we did not even see IT expenses. That was a little surprising because we were told we have a very strong IT function. That was a little surprising there. And we did not even see director salaries. We have seen the dentist salaries, but I'm sure in a proper classification, you will show the director salaries separately, even though all the directors are dentists. So coming back, you can go for debt because we have 48 million of assets available at the book value. I'm sure we need to do the revaluation there. And the value can be higher. So you can borrow from the bank, so you can borrow from a present shareholder, you can borrow from a third-party non-banking institute as well. A cost of debt can be calculated as 8%, even though we don't have any gearing. Our competitor got. Our competitor is paying 120 as the interest for the 1,500 loan. All figures are in thousand. So 120 divided by 1,500 is basically 8%. 8% cost of capital, 8% cost of debt. I'm sorry, 8% cost of debt. Of course, if you go through the F2 videos, you will see cost of debt needs to be calculated as interest rate into 1 minus T, tax rate needs to be adjusted. So that's why I said here cost of debt before tax is 8%. We've got to calculate what the cost of debt after tax is. So tax rate is not given, but you can use effective tax rate. Effective tax rate is tax divided by the profit before tax. Tax divided by the profit before tax. So you can do that for us and you can do that for the competitor. See whether you are going to get the same figure or see whether you are going to get two different figures. It will be interesting to see. See whether you get the same figure or two different figures. Now, if your tax rate, since the tax rate is not given, we will go by the effective tax rate, which is the tax divided by the profit before tax. See whether calculate that. If that is, let's say 28%, so therefore 8% into 1 minus 28%, which is 8% into 72%, will be taken as the cost of debt after tax. So debt is one way to finance. Look at the other ways to finance. Equity. Present shareholders, we can ask them whether they are willing to put more money, like a right issue. We can give them more shares. I'm sure they would be looking at our net profit ratio of 30%, return on equity capital of 63%. I'm sure they would like to put the money. Out of the 40 shareholders, some shareholders might not be able to put more money in. In such a case, the shareholding structure will change. So other option is to get a third party non-dentist to buy the shares, but then you got to argue whether you are willing to change the rule that is available or not. So in one of the mock papers, we are arguing about that as well. Be prepared. Other one is the retained earning. Well, we have a large amount of retained earning available, but for you to utilize the retained earning, there should be cash available. The cash availability is very minimal. We can issue preference shares, we can issue convertible shares, convertible debt. All that can be done. They are coming from the F2, chapter number 1, sources of finance. So this is just to relate you to F2, chapter number 1, sources of finance. Return on equity capital and return on capital employed ratio is given as 63. I would like to double check that and we will talk if the numbers are different. So these standards I will not go into. There will be many new things that we need to implement on the exam day, like rational planning model, like risk management group, target costing, balance scorecard, activity-based costing. There are some common difficulties that we will have in implementing any of those. Knowledge of the directors can be a problem because they are dentists. Their knowledge on activity-based costing, their knowledge on the activity-based costing, rational planning model might not be great. We are a 72-year-old company, so change might not be easy. We are making a lot of money, 30% net profit. Therefore, acceptance of the new ideas might not be very easy. With 30 different practices, 30 different locations, so implementing any of those throughout the company might be difficult as well. So those are some common difficulties that you may write on the exam day, depending on what is given on the exam. Well, look at the market and the market share that we have. We have 2 million people in the capital city and surrounding region. We have 157,000 of our patients. Work out the ratio and see how many we have covered. And the age distribution might have a direct impact into your direct product profitability. So what I'm trying to say is you may need to calculate product-wise profitability, which means what? You may need to calculate different product. We have 12 different services available, 12 different product available. Which product, which services are making more profit, which products are making lower profit. We may need to calculate that. But that may be linked to age of our patients as well. So very old patients, well, I don't know, depending on what you mean by very old, some of them might not have any reason for them to come to us. But little less older people will be more concerned about the health. Younger people will more concentrate about the cosmetic treatments available, which are expensive. Middle income people might worry about only the minimum checkups that needs to be done. Below 17 years of age, maybe the VHS patient, they might not be coming to us at all, depending on what our policy is. So you may need to calculate not really customer-wise profitability and not really product-wise profitability. You may need to calculate customer group-wise profitability. So how much money do we make from the peoples whose age are above 70, above 60 to 70, maybe 25 to 35. So that will be interesting calculations to be done. Don't forget, marketing will differ based on the target market that we try to push. If you're trying to push for the cosmetic surgery, maybe Facebook is a better way to market. So customer group analysis is something that can be important there as well. Customer group analysis is something that can be important. Protecting the environment, you got to try to protect the environment. I mean, what kind of power sources that we use in our different practices? Do we use the latest machines where the power consumption is less? Do we reduce the transportation? Because when the transportation is more, you are damaging the environment, you are polluting the environment. Waste disposal, we have waste that needs to be disposed very carefully. Are you being careful about the environment when you're doing that? Well, stakeholders is a common area. This is a slide that I copied from somewhere else. I just downloaded this slide. So you got to be able to classify your stakeholders into high power, high interest, low power, low interest, based on Mendelov power interest matrix available. There are sources of power available. There are resolving the stakeholder conflict methods available. All those are coming from the E2 areas of the syllabus. So you got to see high interest, high power. They are the key players. Major drivers of change needs to be satisfied all the time. Then you have high interest, low power. High interest, low power. Their power is low, but you got to kind of keep them informed. Then you have high power. They have less interest on you. Ensure you keep them satisfied. So for your organization, you might, again, something that I have downloaded from internet, you might need to do a chart, something similar to this. Well, you understand high power, high interest, they are the key stakeholders. High power, low interest, you got to keep them satisfied. High power, low interest, you need to keep them informed. But you need to put the relevant names, categories of our stakeholders into the individual areas. So you will be able to manage it better. So look at who our key stakeholders are and try to see where you will put them. I mean, where will you put it? They're very high power. They're very high power. They are the government, but their interest levels on you may be less. Might be slightly higher, medium, because you are the largest in the capital city. But VHS has very high power over the dental industry. But for a small practice of 2 dental practices, their interest will be very, very low. They're not worried. So those practices should try to ensure VHS is always happy. Do what they want you to do. But in our case, VHS might be having a little bit more interest than for a small practice, but the power is high. And we have dentists, right? We have dentists. So you got to figure out, okay, how do we, I mean, where are the dentists in my classification of the Mendelov? Where will I put them? Don't forget, they're not like other employees. I put other employees separately, dentists separately, shareholders separately, because dentists are clearly powerful. They are the most important set of employees that we have compared to receptionists that we have, compared to some of the finance team members that we have. So you got to have the respect for them. The shareholders are 40, which means there are dentists who are non-shareholders. So that's the category that I was talking before. Then we have suppliers. We are national dental. They're very important stakeholder for us. Government, patients, different type of patients. I know we don't take VHS patients, but if we do, the insurance patients, competition. So you got to try to kind of put them into different. You got to try to put them into different classifications as well. So this is what I wanted to do as a basic points today. Some of the areas that I wanted to cover. And so this is a quick video on the areas that we have not covered before. And you will get many more videos as we go on. Enjoy and be